Welcome to the stealth bear market. Holy moly, is this getting difficult to navigate. We got a lot to talk about on today's episode, but I'm going to try to keep it as condensed as possible. Let's get into today's episode. All right, everybody, we're looking here at the 11 sectors that make up the S&P 500. First thing I want to call out here before we get into some of the data that came out today, technology was the only sector in the green. We're going to touch more on that here. But this to me is crazy because there was almost 5-to-1 decliners in the S&P 500. And yet the market really didn't end all too down. It's been still levitating higher. And it is almost 4-to-1 decliners on the Nasdaq. What does that mean? It basically means this. The S&P 500 had around 90 advancing stocks today, and around 414 stocks within that have declined. The Nasdaq, about 650 advancing stocks and 2,259 declining stocks. That's pretty powerful data. This is why I say it's the stealth bear market. The market's been levitating higher, but underneath the surface, the market has been getting weaker and weaker. You can see here, this is the S&P 500% of stocks above the 50-day moving average. The market continues to ramp up higher, but yet now we're printing, less than half of the stocks in the S&P 500 are above the 50-day moving average. So you've been probably hearing a lot about this market breadth and a lot of laggers in the market, but yet it continues to levitate higher. As we've seen today, technology led the way. A couple things can happen from this. We can resolve to the upside or we can resolve to the downside. Will these small cap names, which basically are the bulk of these decliners, are they going to all of a sudden catch a bid? We'll go into those charts. Or is the broad market going to catch to the downside? It's hard to determine right now, but there are definitely strategies that you can put into play to be prepared for either scenario. Now, CPI data came out today, higher than expected. This is the Consumer Price Index year over year. This is some interesting data. We came in at actual 5.4%. So the last four reports were above forecast, right? So they forecasted, all these really smart people, they forecast the numbers, and they were off by a significant amount too. I mean, forecast was 4.9%, and we came in at 5.4. That right there, we haven't seen since here in mid-2008. Interesting. We already know what happened around that time. I'm not saying that that's going to happen here. Times are different, so we just got to be mindful of that. Here's the Consumer Price Index month over month, also above forecast, significantly above forecast. So the forecast was 0.5% month over month CPI increase, and we came in at 0.9%. How did the bond market, first off, you can interpret this how you want to interpret it, okay? Now, this is what's beautiful thing about charts and the bond market is you have the bond market is all knowing. That's the saying. The bond market is more smarter than the equities market. So you want to see, how this data is interpreted through a market. Just look at the yields. Well, the yields started the day down, which was a little bit of a shock, okay? But then they started clawing back. You can see here TNX started down, started moving slowly up. This is the 10-year yield, and then pow, just out of nowhere, just boom, 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 boom. It was like a big delayed reaction. Could be potentially creating a little flag pattern here where we break out even more to the upside. It's getting a little frothy, a little bit overbought, so we'll see, okay? The Nasdaq 100, it does very well when the 10-year yield has been dropping pretty much since, where has it been dropping? Like right here in May, mid-May, it's been going down. Let's take a look at the Nasdaq 100, where we're mid-May, right here, boom, it's been going vertical. Now look at the daily candle. Indecision candle, right? Two doji candles printed side by side, very small range bodies, represents indecision. But look at this long upper wick. It means that we had a lot of buyers here. It was looking very, very solid, which congratulations, you can put on the $15,000 hat or shirt. There was a high point of NDX 100 hitting 15,002.28 cents. So pretty powerful. But as soon as the 10-year yield really started to ramping up, that's when the tech started to lose its footing. Now, if you look at the 15-minute time frame on the Qs, you can see here that big rally up, but then it completely reversed itself right there, finishing only flat for the day. I mean, the context of the chart is still bullish. I can understand short-term bearishness, but you got to understand one day doesn't change anything. You know, I mean, it starts with one day, but it doesn't change the trend in one day, right? We still have higher lows and higher highs. The 5-day moving average is still from the bottom left to the top right. It is still sloping up. A big down move would be looking right around 353 to 355. That can act as a zone of support. It matches the volume shelf profile right here. We'll see if we can get down there. I saw a lot of put options being loaded up today on, I think it was a 345 put options for 723. So the volume there went pretty haywire. So some big bets. We'll see if that pans out for those people if it gets printed. Now, also, there's an area of support right around here, 359 to 360. So we'll be mindful of that little zone in there too. What happened to the dollar? The dollar, boom, shot up. Pretty strong day for the dollar overall. When the dollar moves higher, there's typically an inverse correlation to the S&P 500. Hasn't been tracking all too well as of recently. Same with gold, right? There's an inverse correlation there. But we saw this big move. We'll see if this is one of those just moves to the upside and we might hit in resistance, but then it's going to completely, start falling apart. We'll find out. If a full measured move of this bull flag breaks out, I mean, that could take us to around 94.50, right around that range, 94 to 94.50, that zone. So we'll continue to monitor that. Look at gold. Gold actually had a positive day, but it's still within this downsloping trend line. It's just holding up there pretty nicely. This to me suggests, hey, it could be getting ready to break out here. So we'll continue to monitor that. The dollar, like I said, a pretty decent big green candle for the dollar, but gold, it didn't have a down day. So that was impressive to see. Oil, nice big solid move for WTIC, this light crude oil, up 1.55%, still remains in a very bullish trend. What did we see for energy sector? The energy sector was down around a 1%, so down 0.76%. So here seems to be somewhat of an opportunity, as well as financials. I've been taking a closer look into financials today. If you're on my Discord, you probably got those notifications about specific bonds and then also the financial sector. But this down day, big banks are reporting. I didn't even look at the JPM report. I think it came in under what they expected, and the market took poorly to that news, but we still have a lot of big banks. I could be wrong. I have to look. I did hear something about the reporting not be that great, but what was interesting about financials is the day prior was a pretty solid day, so it seemed almost as if it was interpreting good news, and then we had a little bit of a move down today. However, like I said, one day doesn't make a change. It doesn't change a trend by any means, so we'll continue to watch and see what develops here with that. Now, oil, like I said, the energy sector looks like an opportunity here, especially if oil continues to just keep on trucking higher here. And it seems like it's doing so. The trend is still very, very strong. What did Bitcoin do today? Bitcoin down around 1.43% since I pulled this report. Some people are calling this a descending triangle. I just put it in a channel. I will say the price percent oscillator looks like it's weakening out here, getting kind of flat to rolling over. Was it a bearish crossover? That is a bearish crossover. The blue line is now above the black line. That signals a bearish crossover, and it's been sloping. So we haven't gotten a spread yet, but just know when it does crosses over, that's the early stage of a bearish crossover. But when the trend really becomes bearish, you'll see the signal line is just kind of spread wider apart. So you can see the crossover, and then you get this big flowing river to the downside. And right now it's been a very tight move to the upside. Now it's starting to cross over. So we'll see if this has movement. If it breaks down through this 30,000 range, I would expect to see this start to widen out and become more bearish. Let's quickly look at the indices here. SPY still remains in an overall uptrend. As you can see, we saw some weakness there into the end of the day. We have a couple gaps beneath us. Those can act as support. The 5-day moving average is still inclining, and it's still in bullish context. So where can we potentially look for buying opportunities if you want to play these dips? 431.50 to 432.50, this kind of zone in here to fill the gap can act as a level of support. They make for good risk versus reward trades. PMO indicator down here, it is going into the bearish territory below zero. We'll see if it gets down there. we'll watch for potential bullish crossovers as it comes into areas of support. Dow Jones Industrial Average, we'll look at the DIA. Also, very similar story here. 5-day moving average is inclining. Things are pretty good. I wouldn't be too scared here, to be quite honest. Things are in bullish context. It's a little bit of a shake-up. We have OPEX week. We have the Fed coming out and speak in the next 2 days. So, it's hard to be bearish in this environment, but it pays to be bullishly cautious or optimistic, in times like these. So you want to be cautious and careful, because there are various stocks breaking down. So a lot of retail traders are probably even feeling the pain. Like, for example, today, I'm going on a little bit of a tangent here, but with all these declining stocks and you get this midday move down in the indices, those type of moves, they will destroy short-term, out-of-money options. Okay, it'll blow them up. So when I trade personally, so I have exposure to small tech, it's big tech, but a small portion. I go into these short-term options, but I risk such a little amount of money, like of my capital and my portfolio, because I want the exposure, the potential to see a big move to the upside. But things are getting very overextended, and a lot of these advancers versus decliners, the decliners are outweighing significantly these advancing stocks. And like I said, it's going to catch one way. Either these small caps are going to start moving back up and start pumping the market higher, or eventually the broad markets are going to catch to the downside. It's anyone's guess at this particular point in time, to be quite honest. The IWM on the daily time frame still completely sideways. Hasn't gone anywhere. Down today, 1.88%. That really, like I said, so down the biggest day, 1.88% overall. The other indices, this one took the biggest hit. And that's why you're seeing so many declining stocks over the advancing stocks. Okay, so we'll continue to watch to see if it breaks down this low. That'd be pretty darn bearish if it breaks down through this previous low. But we still have support right at around 212. Here on the 15-minute time frame for the IWM. I posted this on Twitter. I said if it gets above 224, that could be short-term bullish. It didn't get there today, so I'll continue to watch. If it fills this gap, that can also act as a level of support. But we have the PMO. It's below zero. It's heading down. It's getting a little bit overextended to the downside, so we'll watch to see here where we can potentially get a bounce from, short-term bounce at least. Let's look at a couple indicators. Nothing crazy here. The RSI on the NIAD, the advanced decline, is back by 50. We talked about that last time when it was at 50, and it usually presents itself as bounces. But this was a quick move, and we have a downsloping trend on the RSI. So, Bollinger Band's tightly coiling up. We have the advanced decline line now below the 20-period moving average. We're right above the 50 still. The context of this is still strong, but it's clearly diverging, right? The S&P 500 is moving higher, the RSI is losing momentum, and this is relatively flat. So we'll watch, okay? This is why I'm saying, pay attention to this market breadth. It's telling a story. There is this stealth bear market going on, and it's either going to present amazing opportunities or it's foreshadowing a little bit of a warning sign. If we look at breadth here, NIMO, this is the Nisey McClellan oscillator. Pretty big down day. What I find interesting here is on the days up, it doesn't even move up hardly, but on the days down, you get this pretty dramatic reading. And I'm like thinking to myself, okay, that's not the most bearish sign. I can go both ways with it, but if the market moves down slightly and it gives an overextended reading, that tells me, okay, well, the market's getting prepped to move higher now and bounce from these levels. But also, to take a note, as it drifts higher on multiple days of these negative breaths here, that to me is a little concerning. That was happening back here. It happened over here. So it happened multiple times, and it was giving us a warning sign. And, you either paid attention to it or you didn't. We've already went through this chart. This is the percent of stocks above the 50-day and 200-day. Yeah, clearly a divergence there. This is the sell signal. It hasn't updated yet. If you're part of my Discord, I posted this earlier. This looks like it's going to be triggered today. It looks like it has been triggered today. What do I mean by that? Well, when it crosses from the bottom through this red line, this 0.8, the CPC, right? This is the put to call ratio. The 10-day moving average, we did that to smooth out that data. When it crosses through 8, that's typically a warning sign, a sell signal. It doesn't mean sell everything you have. It means take profits, tighten your stops, keep it simple. And this right here is the SPIP over GOVT. And what is this? Well, this is a good way to know whether or not the market is interpreting, okay, they're believing this transitory narrative, or if they're not agreeing with that. And if it goes down, that to me signals that the market believes this talk. But if it goes up, okay, they're not quite believing it. And what I noticed was when you apply a 10-period rate of change to this ratio and we get a move to just right above 1.25 on the rate of change, if we get a spike up there, very shortly after, we see some spikes in the VIX. Now, I look back through history, I've seen it happen multiple times, but this is just relevant as of now in the shorter term. So we're just looking back to August, and it spiked here, bam, we spiked up, boom, right here, we spiked up shortly thereafter, here and here. And then just recently I called this out that it looked like it might do it. It did it. And then we saw a 41.9% spike in the VIX. The rate of change now is tracking back up. We'll continue to watch to see if that does spike above, because that can also signal, like I said, a potential early warning sign as far as, not the end of the world, but hey, make sure you're taking some profits here or hedging a portfolio. All right, that's all I got for you on today's episode, everybody. Hopefully that helped out. We covered some CPI data. We covered some of the indices and some key levels to watch out for going into tomorrow. I've been playing it pretty light overall. I have a larger cash position. Why? Well, simply because of this stealth bear market that's underway. Either it's going to resolve itself and move to the upside, or the indices are going to catch to the downside. What does a downside move look like in the indices? I don't know. 2%, 4%, 5%, maybe 10%, which would be seemingly Armageddon as of now. I mean, the markets are completely extended. We looked at quarterly charts, right, previously, and those things are outside of their upper Bollinger Bands for the S&P 500 and trading out like completely out of it. And eventually that stuff, will revert, or it'll come back within those Bollinger Bands, or reconnect with a quarterly 5 EMA or a monthly 5 EMA. So, like I said, you need to be prepared for something that people aren't paying attention to, but you also need to play with the trend. So what does that mean? It means this. It means you got to be bullish based off of technical analysis, and you need to be cautious. All right, that's all I got for you today.